Wow, so what's going on in the market from the lender side? Some pretty important stuff. Let's find out next. Hey, Dave Edwards, Treasure Valley Dave here, your great agent by your side when it comes time to buy a home, sell your home, or even relocate here to the Treasure Valley. And so today we've got a special guest in the studio, Darren Ramp. Thanks, Darren.
Hey, Dave, how's it going?
Hey, it's going good. There's a lot of stuff going on in real estate, and a lot of that is driven by what's going on the financial side. And I know that you've got your finger on the pulse of what's going on, and wonder if you could give our people a quick update.
Yeah, I've just been praying rates come down, and I think it's finally happening. Home values are still staying steady, so we're not losing value, but
Okay.
rates seem to be coming down. Everything is coming into play that will lower inflation, as we've been, the government's been trying to do,
Right.
has been trying to do, and everything they've been trying to do is finally coming to fruition, and we're seeing signs of the economy slowing, which is great for interest rates because interest rates follow inflation.
So they're coming back down a little. We're not going to get back to the 2s and 3s, are we?
I don't believe so, 2s or 3s, but I think we'll land at a healthy, hopefully between 4.5 and 5.5, which is healthy.
Is that historically about normal?
Historically, we're still low. Historically,
Really?
yeah. But you throw in the cost of appreciation of homes, and that's where the affordability comes into play, and it's difficult for our home buyers to buy.
Right. Yeah, it
Um,
is.
But if we land at that healthy 4.5 to 5.5%, that seems to be a good part.
So it had been, I mean, just not too recently, it was like in the 7s and touching 8, right?
Yeah, we definitely got up to 8%. Now we're touching 7. So
Okay.
there's some reports coming out actually this week that if they're favorable, hopefully we get down into the mid, hopefully low 6s.
Wow. That would be, that would certainly help a buyer with their payment. Plus, it's going to help a seller because more buyers are going to be coming out. More demand is going to keep prices steady. I don't know if that's going to increase house prices, but there'll certainly be more buyers eligible to buy, right?
Yeah, it's a teeter-totter. It depends on how many buyers come into the market and how many people are selling their homes to create more inventory, how many homes are being built. So it's a constant teeter-totter to try to gauge it right as a buyer.
Right.
And even a seller is really tough to do. So it's all comes down to circumstance, I think, really,
Right. Well, now recently I had a circumstance, and Darren helped me with that. I bought a different home. I needed a little bit more space, some elbow room there. And he suggested that I go with a VA loan. And the reason for that is even though interest rates are higher with a VA loan, and if you guys, are eligible for a VA loan, check this out, that you can get that rate lowered without going through a whole like refinancing thing. Is that right?
Yeah, absolutely. VA and FHA. So any government loan has what's called a streamline refinance.
FHA too.
Wow.
Yep. And that's basically no appraisal needed and no income verified. There are things that go into that as well, but
Right.
definitely no appraisal needed.
And so the cost to do one of these is minimal as opposed to say refinancing, right?
Yes, so the cost and the headache of doing a mortgage.
Right.
The documentation that you have to send in and everything is limited.
So, but you still have to qualify for the higher interest rate, the higher payment at this point.
At this point, you do. So there's obviously programs out there to lower your interest rate, temporary buy downs, which I believe we've talked about before, where you can get 1 points lower than the current market rate, but you still have to qualify at today's rate.
Right. Also, mainly builders, but also some existing home sellers are contributing towards buying down that interest rate for buyers.
Yeah, there's a lot of incentives out there because things have slowed down. Everyone's holding out for lower interest rates or
Right.
affordability.
That's
yeah,
true.
there's definitely some good incentives out there to help you do a
And
buy down.
it's the normal, regular seasonal slowdown during the holidays too.
Yeah, absolutely. Every year. No one
So,
wants to
right.
jump into a new home or deal with the process at this time of the year.
Right. Except for Maureen. She moved last time right at Christmas time, and she said it was the best experience.
Yeah, depends. Could
Nice.
get a good deal out there right now.
So back to what's going on in the lending side. What are, if I'm a buyer, or if I'm a seller who's going to be a buyer, because obviously that's what happens, should I wait for rates to come down more? Is there going to be a trend that they should come down more? Is the Federal Reserve, are they happy with the way things are right now, or are they still pushing for more changes? Or?
The Federal Reserve is always, there's a lag effect with the Federal Reserve. Everything they're doing, they should have done months ago, So that's just history, and it keeps repeating itself.
Did you hear that, Jerome?
That is true. I mean, you look at real data, and that's what you see. Their decisions they make are on old data, so
Right.
they're not making the right decisions. Up for debate, but I think now is a great time. House prices are going to continue to go up because of the demand and the inventory. That supply and demand issue that we have. There's too many people coming into market to buy homes, and not enough new homes being created. If you look at it, a seller selling an existing home is not really creating a new home because they've got to move somewhere.
That's true. Huh?
New construction is really the only way you're creating a new home.
And we have
new
some of that
unit.
going on.
We do. We have a lot of that going on, and we need more, which is hard to
Right.
say, but yeah. But that's a teeter-totter effect as well. We can't build too many and sit on too many. You have to play the market and the demand, right?
Which is probably why builders are giving incentives, because once the demand starts to pick up, they can roll back on those incentives.
That's exactly what they do. Yeah,
So
they have to.
what I'm hearing from you is like buying now is good because home prices are still steady and they're down from where they were.
Yep.
And they will be going up as demand goes up.
Correct.
And then builders are going to not have as big of or any incentives going forward because there's going to be more demand, and they don't, the bean counters in the back room are saying we don't need to do this anymore.
Exactly. Yep. And right now you can do with the incentives they're offering, you can do a buy down. We'll do a no cost refinance when rates come down, and then you refi into the lower rate and keep it for 30 years.
And that what you're just talking about, is that back to the VA FHA thing, or is that regular conventional mortgages?
So that's across the board as far as the no cost refinance, no lender fee refinance. Let me
Right.
be clear on that. There's always costs associated that we can't absorb, but there are some ways to absorb it depending on where the market is and where interest rates are. So there's lots of options, but the thing is getting in while prices are still low and there's not a lot of demand out there, and dealing with the interest rate one way or another, because the interest rate you can work with, the home you can't, the price you can't.
Right. Wow. So do you have any recent success stories you can share?
Your success story, Dave.
Well, there's that one. Yeah,
You got a great deal on a home, and you got
that's true.
the current market rate, but we can do the streamline refinance when rates come down, and we anticipate that's going to be, in the near future. We've been dealing with this high
Right.
inflation for a little while, but it's finally starting to come down. So
Well, and that is really true. It's like, so I went with Darren, got myself pre-approved. So, getting into the next house was going to be, as easy as possible. And then we found a place, we looked all over, and we found a place that had been overpriced because, sometimes agents put too high a price on there, like a little commission breath or something. But it hadn't sold, it had been high days on the market. And we got it probably for, I don't know, we got a good deal on it. I won't say it was a screaming good deal, but I think we're very happy with it. And even though, the interest rates looking from today was a little bit higher, we could still qualify for the payment. And we know that the gravy on the biscuit is, like Darren said, when these rates come down, because it's a VA loan or it could be an FHA loan, I can do that. It's not really refinancing. What is it called?
it's a low document, streamlined refinance is what they call it.
Okay.
So yeah, the main thing is the no appraisal needed.
And no
that's
income.
a cost to you,
Right.
the owner, and then no income documentation needs to be verified. So no income asset really. So you really don't have to provide bank statements or W-2s, pay stubs, and that kind of thing.
Wow.
So it's literally just basically if your credit score is still good,
Right.
your debt to income is fine. We don't look at the income, so your debt still is what's reported on the credit report,
Right.
and they just underwrite the property and lower your interest rate.
That is such a relief because, and this probably hardly ever happens, but let's say that, I don't know, you're a real estate agent or someone that works on a 1099 basis and business is a little slow, interest rates have come down, and you'd like to get your payment down to help out with the monthly budget, boom.
There you go.
What Darren just was telling us
Yeah.
about would do exactly that. I like it.
Especially if you're self-employed.
Right.
When you're self-employed and you go to get a mortgage, it's a lot of documentation.
Ooh, that's true. Poor
So.
trees.
Yeah.
So I noticed that as I was setting up the studio here, you're getting the latest information on what's going on. Do you have any latest updates you can share with us?
So right now, jobs report's the big thing. If jobless claims go up, which is a bad thing for the economy, but a good thing for mortgage rates and inflation, that's what we're looking at currently. So there's a lot of reports coming out this week, and if they come in positive on the
Right.
mortgage side, that's going to continue to push rates down.
So I'm going to get on my soapbox just a little bit here. So, we're starting to get into election season. And if I remember right, back before our current presidential administration was in charge, weren't interest rates quite a bit lower? Was it affordability easier?
It was, yes. Yeah.
So-
we had other challenges once COVID hit. Of course,
True.
we had prices going up because everyone started moving out of the states they were in.
Now, why were they moving? Because maybe those people that got elected that maybe we wouldn't elect here in Idaho were starting to put kind of like draconian lockdowns on people, and they were picking who was essential and not. Well, in my mind, and in the minds of people right here in Canyon County, Treasure Valley, everyone was essential.
Absolutely. Yeah.
So,
Choice.
exact. Bottom line is elections have consequences. So remember that as you go out to the primaries and things like that coming up.
Yeah. Get out there and vote.
There you go. And if you don't, if when you vote, it doesn't go the way that you wanted it to, you can vote with your feet.
That's right. You can always move.
That's what I did. That's what a lot of people I know have done.
Yep.
And life gets better.
A lot of great people have moved to Idaho just because of that.
You moved to Idaho.
I sure did.
I moved to Idaho.
Yep, absolutely.
Wow. Gosh. Okay, I'll get off my soapbox now. Do you have any last little tidbits for our people?
Yeah, I would say reach out and see how we can make things work, because now is a great time to buy. When there is less demand, it's always greater for the buyer to buy.
And then throw the seller into the mix. So a seller right now, if there's going to be more buyers out there, his price is going to stay stable.
Yeah.
But if he's selling, or she, then they're also going to be buying. So they're going to be a buyer as well. So even though prices aren't shooting through the roof like they were a couple of years ago, which, I mean, let's face it, that was not sustainable.
Yeah, 14% to 20% is high. We're at like 7, I think we're going to end up for this year nationwide. So
Right.
on average.
So and if you're selling, you're going to be
That's
a buyer on the other end. So
Yeah.
this great buyer information does apply to you.
Absolutely.
Nice. Darren, thank you so much for stopping by this
Thank
morning.
you, sir.
So, hey, I was just talking with Darren, and you know what? If you want to nerd out on this and get some information that really just speaks to your situation, give him a call. He'd be glad to talk with you and nerd out right along with you.
Absolutely. DarrenRamp.com.
DarrenRamp.com. Nice. Darren, thank you so much for stopping by this
Thank
morning.
you, sir.
Man, we'll do this again.
All right, buddy.
All right. See you guys. We'll see you on the next video.
Hey, thanks for stopping in and learning more about real estate in Nampa, Idaho and the Treasure Valley. If you'd like to learn more, watch this video here next or binge on this playlist. When it comes time to sell a home, buy a home, or even relocate to the Treasure Valley, your Treasure Valley Dave team is your real estate expert by your side, helping you get home.